Hello everyone, and welcome to this presentation of a simple way to increase your odds for success. Welcome once again to the Specialist Trading presentation, this weekly stock, Emini, and Forex lesson. My name is Primo. I am the president and founder of SpecialistTrading.com, and in this week's lesson, what I'm going to share with you is a simple technique that I personally use in my own trading that really increases the odds for success. It puts the odds in your favor when you have a number of signals and you're trying to decide which ones to take. Now, for those of you who are new to our weekly presentations, I want to welcome you once again. Specialist Trading, if you're not familiar with our company, is an educational company. Even though we provide you with signals and with strategies, we're really all about teaching you how to empower yourself through all the things that I've accumulated in my years of trading so that you can empower your own self to make your own decisions in trading, whether you're trading stocks, Emini, or the Forex markets. Now, to give you a little bit of background about myself, I've been trading these markets, going in and out of each one of these for the past 36 years. I used to work on the floor of the Pacific Stock Exchange. After leaving the floor, I managed money and traded my own account. And roughly 5 years ago, I started Specialist Trading, where I just speak and teach about all the things that I use in my personal trading and that I've used and have helped me throughout the years. So today I'm going to share with you a simple technique to increase your odds for success that you can start applying as early as tomorrow as you'd like. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to share some performance results and show you some current signals, actually not signals but actual examples of this technique. But please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to remind you, for those people who are new to our presentations, I do like to take all of your questions, but I like to take them at the end of the webinar. I know a lot of people that have webinars like to answer questions while the webinar is unfolding, but I would rather, just to make sure that the presentation flows a lot smoother, I would rather wait till the end. So if you happen to come up with a question or something doesn't make sense, or you'd like to see something again or have me comment on it, please write it down, and I promise I'll get to everything at the last 10 or 15 minutes of the presentation. This shouldn't be a very long webinar at all. And if you happen to come up with a question once we've concluded, please contact us. I will leave you with a phone number as well as an email address. You can contact us anytime you'd like, okay, with any questions. All right, so thank you very much for holding off to the end to ask any questions. Now, what I'd like to do is start out by sharing an email that I received from one of my students, and that's what got me to put this presentation together so I could share it with you today. It starts out by saying, "Dear Mr. Primo, I am a new student of yours, and forgive me if I ask a silly question, but oftentimes during volatile markets, there will be many signals generated in one day, more than I could trade. My question is, which signals should I take? Are some better than others?" Okay, now this is a very common question, and I actually have to deal with this myself many times, such as today when you saw the market really fell out of bed, but there was just a lot of volatility, a lot of movement, in this case to the downside. But it really doesn't matter whether it's going straight up, straight down, or even in a rangy market. If you get a lot of signals with your strategy, regardless of what it is, a lot of times you'll think, well, some of these setups are better than others, but how do I discern which ones are better than others? Many times you'll see, if you happen to take all of them, you'll see that you'll have a few nice winners and then coupled with a few losers, and you kind of wind up at the end of the day breaking even. So we want to pick the ones that are the best. Now, the thing I want to stress here is that the technique I'm going to be sharing with you today can virtually be applied to any strategy. I'll show you at the end of this presentation how it applies to a lot of our personal strategies of Specialist Trading. But let's say you have a personal strategy that it's just built off of the news, or based off news, or based off of some other technical indicators. It's perfectly okay if you use this technique. All right, so these are some of the highlights about this technique. First of all, as I just said, you can apply it to virtually any strategy, so don't worry if you don't have one of my strategies. You can apply it to anything you'd like. You can also apply it in any time frame, in any direction. So it doesn't matter if you trade the daily bars. It doesn't matter if you trade the Forex markets. It doesn't matter if you trade only long or short side. It virtually works in any direction. And on average, it will increase your success rate. Okay, it's extremely simple. But here's the way we apply this. Only trade signals that are closest to the buy-sell line. Okay, that's it. All right, once you know where the buy-sell line is, only take signals once they're generated, regardless of time frame, regardless of market, that are closest to the buy-sell line. Now, I know some of you may be saying, well, what is the buy-sell line? Oh, I get it. I have to buy some program now that you're going to be selling. No, the buy-sell line is extremely simple. What the buy-sell line is just the 50-period simple moving average. But we call it our buy-sell line because it determines which side of the market we're going to be on. But regardless of that, if you get a signal close to the buy-sell line, this has a higher chance for success than others. Okay, so look back, do a little homework on the last 5, 10, 20 trades you've had, and look at the ones that were closest to the 50-period simple moving average. I can almost assure you that those are the ones that had a higher probability for success than the ones that were stretched beyond either above or below that 50-period simple moving average. So this is going to take a little homework on your part. Go back and look at the signals you've had and make sure you have a 50-period simple moving average plotted, and then see what type of success you had if you had only taken the ones that were either close to the 50-period, touching the 50-period, or at least intersecting it a little bit. So let's look at some current examples. Okay, these examples were up to roughly about the last few weeks or even a month ago, but they're fairly current, and we're going to start out with examples in the stock market. Okay, so let's start out by looking at Yahoo. Now this goes up to the mid-May point, and as we can see, looking at this chart, all right, it's had this very nice sustained uptrend starting at the beginning of the year all the way up to roughly about a month or 3 weeks ago. All right, so someone looking back in hindsight said, well, yes, we were in a nice sustained uptrend. I would have been probably buying in this uptrend, but where would have been the signals that held the highest probability for success? Well, looking back in hindsight, obviously these are 3 points here where we would have loved to taken some long entries here, because these were points at the low of a pullback. But looking back in hindsight, how would we have known to take signals that were generated anywhere in these areas? Well, we simply applied the buy-sell line, and guess what? Each one of those places either touched or intersected or was very close to the 50-period simple moving average. So you see how you really increase the odds for success. Now, many times, regardless of what your strategy or system is, you may have issued a buy signal roughly right here, let's say, okay, once we broke out of this little consolidation. And let's say you were holding on to the position, and for a couple of days it looked pretty good, but then we fell out of bed. Okay, so at this point, most likely, like most traders, you would have scared yourself and thought, well, we've already had a nice run. I don't want to buy here at the very top, so you probably would have stopped yourself out. Okay, maybe perhaps once we went below the previous low here, you would have been stopped out. But it's at this very point right here where you would actually be looking for entries. So the reason being is because we're very close to the buy-sell line. So you see how once you have a nice established trend, all we've done is pull back to this 50-period simple moving average. So anytime you have some type of a signal that is very close to the 50-period simple moving average, that's the high probability one that you should be taking. On balance, it's in our opinion that those will have higher odds for success. Now this works if you're going in a downtrend as well. We all know that Apple's been acting poorly for the last year and a half. As we see here, coming into mid-April, about a month or two ago, we were in a real sustained downward move, so obviously we're in a downtrend. Okay? Now looking back in hindsight, we would have wanted to short this market. We don't want to fight the market and try and pick a bottom, or that would have been a recipe for disaster. But let's say you had a number of signals while you were trading Apple, and you didn't know which ones to take. There were a lot of signals, and you wanted to take ones that really had the highest degree of success in store for you. Well, obviously, these would have been some nice areas right here to go short. Let's say you had generated a signal here, perhaps one here, perhaps one here, and here, and so on. The ones circled in red, obviously, looking back in hindsight, would have been the ones to take. But how would we have known that? Well, we plot the 50-period simple moving average. And you see how when we got close to that level, that's where there were a high probability for success had we simply shorted them. So these are the areas you want to take the signals. Now, obviously, if you have enough capital and you're someone who likes to trade a lot, you can virtually take any signal you'd like. But most beginners and most people that are a little more conservative and people that really, just want to have this really nice upward trend in their P&L statement are only wanting to take the signals that have the highest degree of success along with them. So these are the ones you should be looking at, the ones closest to the 50-period simple moving average. Now this simply applies to E-minis as well. Now I know a lot of people like to day trade the E-mini, but you can also apply this to a daily chart of E-mini. looking back here all the way just about 3 weeks ago, this chart, obviously up until the last 2 or 3 days, this market had been going straight up. So we had a really nice uptrend established since the beginning of the year. Now, we didn't want to fight that uptrend, so we wanted to go long the E-mini. Had we looked at the most opportune places to go long if we were a buyer, would have been roughly at these spots right here. Let's say our strategy or system, whatever it is, I don't care if it's based off an indicator or if it's based off the full moon. It really didn't matter. All that matters is that you take the signals that are closest or touching the buy-sell line, the 50-period simple moving average. Remember, there could have been a signal generated right here, all right? Once we broke out of the short-term consolidation, you could have purchased it, and then look what would have happened. You most likely would have stopped yourself out or thrown in the towel. You would have scared yourself, and you would have exited the trade. But if you had waited for price to come close to the buy-sell line, that actually would have turned out into a very profitable trade. Now, most E-mini traders like to day trade, so let's go to a different time frame. Let's look at a 1-minute chart. Okay, now this was, I believe, just a couple of weeks ago. This is a 1-minute chart in the E-mini. Now, looking back in hindsight, we were in a downtrend. Now, if your strategy had given you some sell signals, it probably would have given you a lot of different places to go short, either in a breakout or trying to pick a top or continuation pattern. But remember, we don't just want to take each and every signal, because many times you'll give back a lot of your profits. So we want to take the signals that have the highest regard for success, and those are the ones that most likely would have been up around these levels. But how would we know to take those in hindsight? Well, we simply apply the 50-period simple moving average, and guess what? At these points, this is where we touched or intersected the 50-period simple moving average. And now we can go on to the Forex markets. A lot of people like to trade the Forex markets, especially because they're great trending markets. Looking at the dollar-yen all the way to the mid portion of May, just about 3 weeks ago, we were in a sustained uptrend. But where would the highest probability signals found? They would have been found roughly at these levels. Why? Because they were touching or just about touching the 50-period simple moving average. Now, this works in any time frame, in any direction. So if we look at a weekly chart of the same currency pair, going back to 2009, we were now in a very sustained downward move, a downtrend. Where would we have wanted to take the signals that had the highest probability for success? Obviously at these top levels here, but how would we have known that in hindsight? Well, we'll simply plot a 50-period simple moving average. My mentors taught me that the reason why most traders lose is because we overcomplicate our trading. We try to make it too complicated. And for some reason, as traders, we've been taught that the more complicated we make our trading methodologies, the more odds are that we'll have a successful strategy, or we'll have a successful trading plan. But in my 36 years of trading, it's actually the opposite. Okay, I've learned that the more complicated your trading is, the more you're ruining your chances for success. When you keep things as simple as possible, just by plotting a 50-period simple moving average, you'll find those levels which hold the highest regard for a successful trade. So this is where you should be searching for signals, right around these levels. All right? You don't have to wait for any news announcement. You don't have to wait for any indicators to cross. You simply look once we get to these levels and then see if your strategy coincides with any type of a signal. That's it. That's how simple it is. Remember, if you're looking for high probability trades, here is the technique. Only trade signals that are closest to the buy-sell line. Okay, now for those of you, once again, who are new to our presentations and new to specialist trading, the buy-sell line is simply another name for the 50-period simple moving average. So once again, as an assignment, go back and track your most recent trades, regardless of what the strategy is. If it's one of mine or one of yours or something you got from another educator, go back and see the signals that you took that were way far stretched beyond the 50-period simple moving average. And then look at the ones that were very close to it. I can almost assure you that the ones that were closest to it had a higher probability for success rather than the ones that were stretched apart. Now, points to remember. What I just showed you, a lot of people, when they see these things, their eyes light up, especially my beginning students, and they say, boy, if we're in an uptrend, the minute we touch the 50-period, I'm just going to buy at the market. Okay, that's incorrect, because why? This is not a strategy. This is just a technique for locating high probability areas for a signal. All right, it's not a strategy. In order to have a strategy, and a successful strategy, you have to have other things in common with the trading plan. You have to have regard made for entries. You have to have details about stop placement and about exit points. Now, other things to remember about this technique are you're going to increase your odds for success by taking signals closest to the buy-sell line. But if you want more trades, choose a lower time frame. So this doesn't have to just work on daily bars, as we showed a lot of the examples. You can use this on a 5-minute time frame. We showed you the E-mini on a 1-minute time frame. Okay. Now, if you want less trades, even less trades than what we showed, use a higher time frame. Go to a weekly time frame or go to a monthly time frame if you like, because this principle works in any time frame in any market. So it's really up to you how you want to apply it. Now, I want to show you something right here. This is a snapshot that I took just about an hour ago, okay? Because I know a lot of you are saying, well, Steve, sure, this all sounds great on paper, but in hindsight, this would have killed me today. Because look at it, this is a daily bar of the S&P 500 index, okay, going back to March, just a couple of days ago. And as we see here, as we came close to the 50-period simple moving average, these are actual signals that are generated using one of our best strategies, strategy number 4. Going back the last 2 months, we had 4 signals that would have been generated off of the S&P index. 3 were profitable and 1 was break even. But as we look at the action, what happened today, just taken about an hour ago, we see here that we crossed through. Now, the beauty of our strategies, what we promote, is that we have to look for certain conditions to be met. And guess what? There was no signal provided by what happened today. Now, all these other days, once we got close to or touched the buy-sell line, provided us with a signal. A signal was generated. But because we came close to today, the last 2 days, there was no signal generated. So this is what you need. This is what enhances a favorable strategy. This technique is just used to spot where you should be looking for a strategy entry. But if you want to even increase your odds for a better success or for a higher rate of success, you have to have a strategy that has stood the test of time, that works well in all markets, and that has a certain amount of rules, not a lot, but a certain amount of rules that will generate some type of a setup. Now, as we just stated, going back the last 2 months, a setup was achieved on 4 separate times, very close to the buy-sell line. 3 were profitable, 1 was a break-even. Looking at today, there was no setup, so there was nothing lost at all. So there was nothing you would have been heard about today looking at a daily bar chart. Now, if you just bear with me for the last couple of minutes here, I'd like to share with you what it means to become a member of Specialist Trading. This is my homepage of my site, and as you can see, I offer courses in stock trading, E-mini trading, and Forex trading. Now, each one of these courses comes with upwards of 10 specific different strategies that use all the things that I talk about in my webinars and my presentations, and that I presently use in my own trading as well. Now, what I'd like to share with you today, and thank you for attending as a special discount for all our attendees, is one of our best strategies, and we're offering a combo package. This is strategy number 4. This is probably our most popular and our most resilient strategy that we have. Why? Because it works well in virtually any time frame in any market. As you see here, we have the 3 combo package for the E-mini, the stock market, as well as the Forex currency pair market. Now, once you become a member of Specialist Trading and purchase these combos, you'll get instant online access, detailed instructions. You'll know immediately where our entries are, our exits, and our stops. We can tune this so that you can trade this conservatively or aggressively. Now, this also comes with 1 year of trade signal alerts. Okay, and I'll show you in just a few moments of how you can see those trade signal alerts that come on a nightly basis when signals are generated. This also comes with 1 year of weekly trading lessons and my personal email address, so you can contact me and access me whenever you'd like. Now, if you purchased all 3 of these for all these different markets individually, this would roughly be about $2,000, $2,100. But we're discounting this today for all the attendees down to $895, which is an unbelievably low discounted price, but it's for a limited time only for all the attendees. Now, let me show you some examples of how well this strategy number 4 works. Let's start off with some signals on stocks. This is signals in ABX going all the way to mid-March. These are all strategy number 4 signals. The green arrows were buy signals, and the red arrows were actually sell signals. So you can see how well this works with the stock package. This also works in the E-mini. If you have the E-mini package as well, you can purchase long side signals as we had here. If we look back, going back to the beginning of the year, we had a total of 6 signals that were generated, and 5 of those were profitable. We only had 1 loser out of all of those signals. If you want to apply the same course on an intraday chart, well, it works just as well. All right, these are strategy number 4, E-mini signals on a 5-minute chart going back to the 12th, which the 12th was just roughly about a week ago when the market was starting to go down on a 5-minute chart. These were all sell signals generated using strategy number 4 for the E-mini. Once again, the beauty of this is that it works in any market, any direction. Here's a daily chart of the Australian dollar. For you Forex traders, you'll know that the Australian dollar has been going straight down for the last month or two. And look at the signals that were generated using strategy number 4. Here was the last buy signal we had, and then once the strategy had determined that the trend has changed, it only gave us and furnished us with sell signals. Once again, this is a great combo. If you purchase this individually, or the usual price to all 3 of these would cost you roughly about $2,100, $2,085. We've reduced it now for all the attendees today down to $895. But this is for a limited time only. Remember, you have my personal email address. You can contact me whenever you'd like. Now we are at the question and answer portion of the period of our webinar. If you have any questions concerning any of our strategies or anything I've talked about today, you can go to our sister site, which is protraderstrategies.com. That's where we sell the packages and the different discounts and deals with our strategies. Or you can contact our head rep, our head sales rep. That's Don Jans at protraderstrategies.com. If you'd like to speak to someone individually, you can call us directly at area code 310-492-5393. Okay, thank you so much for waiting. I know it wasn't a real long presentation, but I want to take any questions that you may have. So the first question I see here is from Bob. Bob asked, he missed the very first part of this presentation. Is it being recorded? Yes, this presentation is being recorded. If you want to get a link to this special presentation, just simply email Don Jans, or you can call us up and we will send you a recording. We'll send you a link to the recording of this, okay? But this was also being recorded as well. Now today, I'm sorry I wasn't able to get any snapshots from an actual trading day today, but today on a 5-minute chart, we had a number of tremendous sell signals if you're trading the E-minis today using strategy number 4. So this is how great this strategy is. As I stated, it's probably our most popular and resilient strategy we have. The best thing about strategy number 4 is that you can virtually transfer it onto any market. As you saw there with the different combos. Just a few minor changes, it fits any market in any direction. So we share with you this in all the courses and in the actual details of how to enter and how to exit the trade. Another great thing about our courses as well is that, once again, it's almost like a personal mentorship with myself. You have my email address. Many times I speak to people 2-3 times a day, answering any question they can have. A lot of people we suggest to paper trade in the beginning because we want to make sure that they fully understand the process. And during that paper trading process, they're emailing me throughout the day to see if there was an actual signal taken and where we would have exited. So it's a great, great learning experience so that you can empower yourself with these tools to trade on your own. Antonio asked a question, is how do you use the simple moving average when it's above on the H1 and H4 and down on the daily? What this person is asking basically is talking about different time frames. In other words, if you have a certain time frame or an hourly time frame or a 4-hour time frame and then a daily time frame, each one is most likely giving you a different signal. In other words, one may be close to the 50-period simple moving average on an hour chart. Maybe the daily chart may be very far away from that actual 50. And this is a great question. And this is the same thing I tell all of my students. I only trade the chart I'm looking at, okay? I know a lot of people swear by using a higher time frame to confirm a lower time frame, or using even another indicator to confirm a lower indicator. I have been trading roughly 36 years, and in my 36 years, I found no consistency in using that method. Now, having said that, this just means I personally don't use it, but I know a number of people, including students of specialist trading, who swear by this. So if this works for you, that's fine. You can use one higher time frame to confirm the lower and vice versa. But I personally don't look at higher time frames to confirm the lower. I just look at the chart I'm trading. So if I'm looking at an hourly chart, all I'm looking for is that the signal I'm getting is close to that 50-period simple moving average. That's it. If I'm looking at a 4-hour chart, I just am concerned with where the price is in relation to that 50-period simple moving average on that 4-hour chart. If I'm looking at a daily or a weekly or a monthly chart, that's all I'm concerned with. It's much easier, once again, to keep your trading as simple as possible rather than apply a host of different time frames to confirm the lower. As I stated, I know a lot of people swear by this, and a lot of people are, just confirm that it really adds to the success. And if it does, that's great. But personally, on my own personal level, I've never found any consistency to it. In fact, what I've found is that it keeps me out of a lot of trades because I'm waiting for something to be confirmed, and I sit and I wait, and I say, well, I can't take this trade because it's not confirmed on the higher time frame, so I'll kind of sit out. And while I sat out of the trade on the sidelines, I missed a nice profit. So I would rather just take the trade on the time frame that I'm looking at. Okay, Antonio, I hope that answers your question. Once again, I'm not telling people not to use that. I just personally don't subscribe to that method. I hope that answers your question. So as I tell my students in my courses, in my classes, just look at the chart you're trading. If you're trading a 5-minute chart, then all you're concerned about is where is price in relation to that 50-period simple moving average on the 5-minute chart. Okay? If you're trading an hourly chart, the same thing. But don't combine the two. You're just overcomplicating your trading. Okay, any other questions while we have it here? Remember, if you are interested in any of our courses, take advantage of that tremendous discount. If we had purchased that individually, the combo of the Strategy 4 would cost you over $2,000. We're reducing it down to $895 for all the attendees. Bob asked, what percent are you technical trader and what percent are you fundamental trader? Very good question, Bob. I'm probably a 90% technical, but when I say that, I don't mean that I'm using a ton of indicators. I'm not. It's just that the one indicator I'm probably using or the one pattern I'm looking at is a category, can be classified under the category of a technical trader, okay? But I'm not looking at tons of indicators. I'm not looking at tons of different methodologies and systematic type of trading. I'm really not. The reason why I say I'm geared more toward technical side is because of that, and also because I just take news with a grain of salt, because I think news is great. Fundamental news should be always taken into consideration when you're trading a larger time frame. So if you're investing or if you're looking for a longer term type of trades, then yes, you have to know the fundamental news, what's going on economically. You need to know what's going on, say, with the company or what's going on in the world. But if you're trading a 5-minute chart, such as we did today, it really doesn't matter. With, a lot of people say, well, how could it not matter with the market falling out of bed? Well, we got short signals all throughout the day, and we just went with it. So we're really not concerned why the reason the trend is going either up or down. My specialist mentors taught me the same way with this example. They said, Steve, if you are on a street corner and you're crossing the street, but you're waiting for the light to change, and you're with a friend there, you're going to cross the street, and it begins to rain, okay? And it starts to pour, all right? Now you're getting all wet. Now, you don't need someone to tell you that it's raining, because you already know. You're seeing it as it's happening. In fact, you're tremendously wet. Your clothes are all wet. You're getting drenched. All you need to do is to react to it. You either have to get an umbrella, you have to take shelter, you have to get inside. So that's really what's happening. And that's the same way with trading. If you know how to listen to the market, all you need to do is see what's happening, and with a few of the techniques which we teach in our courses, know which direction the market is headed, and then just simply go with it. There's no reason you need anyone to tell you why it did that or why it's happening. Now, if you're trading a longer time frame, then yes, you do, because things move slower. But in terms of intraday trading or even trading some daily bars, there's no reason that we have to focus on fundamental news. So that's my answer to that. Simon is asking, the issue with buying or selling near the 50 line can often coincide with a change in trend direction. Is it crucial there to have a confirming indicator? Yes. What he's basically saying is that many times, sure, I showed some examples where price came down and either touched or got very close to that 50 period and then went back in the desired direction, either up or down if you were shorting. But as well, many times it will give a clue as to a trend direction, which it appears as it may be doing right now. as you look back in those examples, we went right through the 50-period simple moving average today. Okay, so this could be a sign for telling of that we may be now in some type of a downward trend. Well, because of what we use at specialist trading, the tools and techniques that I've accumulated in 36 years, I'm not guaranteeing, but what I've learned many times will keep us out. As I stated, there was no signal to go long generated the last few days because our indicators and our tools already discerned that we were most likely headed lower. So what we're looking for at this point is actually spots to go short as opposed to go long. Now that may change in the next day or two, but right now we're just going to go with the trend. And I can't really give away what that is because that's proprietary. These are things you learn in the course, and these are things we teach just to our members who have spent a good amount of time and money taking my instruction. So we do have a number of ways to keep you out. Once again, this doesn't happen every time because we showed you a couple of losses in the a few of the strategy and before trades. So it won't happen each and every time, but we have ways to stay out of that. Pat asks, will the 50-period exponential moving average do for buy-sell line? Also, do you use candlesticks? So Pat is basically asking, can we use an exponential line instead of a simple moving average? Yes, that's perfectly admissible. Okay, that's all right. There's nothing wrong with that. I just want you to get used to using some type of buy-sell line. All right, I prefer the simple moving average because it seems to be a lot more simple and it has a smoother line. But if you want to use an exponential moving average, that's fine. And he also asked, do we use candles? Yes, we use the candles in our Forex courses. We have a specific strategy number 5, that deals with the candlestick pattern and an array of other indicators as well. But not so much with the other classes. There's nothing wrong with candlesticks. We just don't have a lot of the strategies built on them other than the Forex strategy number 5. Okay. Tim is saying he lost audio. I'm sorry to hear that, Tim. I don't know if you lost it. If you can hear this now or anyone has lost or the audio is going out, you can simply contact us and we'll send you a recorded version of this. Okay, so I hope it's being recorded all right, and maybe it has something to do with your computer system. Okay, we have a few more minutes here before we have to end and come to a close here. But remember, once again, I really want to suggest that you take advantage of that great discount we have for strategy number 4. I was trading strategy number 4 today. There were just a number of great setups today going short the Emini, and I'm sure if you're trading stocks on a intraday basis, there were a number of ways to go short as well. So if you're interested in purchasing a combo that works in any market, in any time frame, in any direction, strategy number 4 is probably our best and most popular strategy for doing that, okay? And we're discounting it tremendously with this combo we have. So I really urge you, if you want to take your trading to the next level, take advantage of that deeply discounted price because we'll be there with you every step of the way, teaching you how to use it properly, okay? All right, well, if there are no further questions, we'll come to the conclusion here. I want to thank you once again for attending. Remember, visit our sister site, ProTraderStrategies.com, or you can contact Don Jans, our senior sales rep, at donjans@ProTraderStrategies.com, or you can contact us directly by calling 310-492-5393. Thank you so much for attending. We'll see you next time. Bye-bye.